Morning, Steve here in Chicago with the morning grain comments. Well, today is USDA report day, so at 11 o'clock today we'll be a lot smarter than we are right now. As far as this report is, usually the July reports are not that interesting, but this one, the USDA is going to take a look at 18-19 world soybean matrix and see if there's any changes that they need to make because of the tariffs. The president just announced $200 billion worth of additional Chinese tariffs if they don't react over a specific period of time. And that escalates the trade wars. So we'll see what they do. The only thing that major they might change in this report as far as U.S. supply and demand is concerned is they will raise acres in corn and beans, which should raise the carryout. The big question is some people are taking as much as 125 million bushels off of U.S. next year's soybean exports because of the tariff war. And that could add to the carryout, which would be negative. Yesterday was a big down day in the grain prices because of this $200 billion additional tariffs. And I don't think the worst is over yet. There were some people that came out and said, if we have good weather this year and good weather next year, and if tariffs are still in effect, corn prices next fall could go down to the loan level of $1.95, and soybean prices could go down to the loan level of $5. So that's still a big move in prices. The other thing is money flow. I was at a meeting the other day in which some people that are watching the managed funds in the ag space say they have left the space. They've lost a lot of money in this downturn. Some of them have fired their money managers, and they probably won't come back to this space unless there's a supply problem. So that raises the question about liquidity. It also raises a question about how quickly prices move based on the fact that there may be less players in the marketplace. We also note that some people think that these tariffs could put a top in the U.S. economy. And so people are starting to watch key indicators to see if the economy has slowed down. When we look at the extent of our economic growth and our growth in the stock market, we are approaching the number of months which historically suggests that we've ended this period. And so we're going to be watching pretty closely the stock market. But as long as the stock market goes up, commodity prices will stay in a deflationary phase. So that will be negative to the prices. So we'll see what the USDA says today. As far as weather is concerned, if you drew up a forecast that will be good for crops, it couldn't be any better over the next 2 weeks. So that's another negative feature into the marketplace. The USDA usually doesn't change yields on their July report today, but they will come out with their first estimate on the August report. Many people think their current yields in their S&Ds are too low. So that's another headwind that the market's going to have to deal with on the August crop report. So as far as negative news, we've got today's report, we've got weather, we've got tariffs. Maybe the only good news is the market is oversold. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.